Hope you're doing well. Hey, wanted to do a Paycheck Protection Program update here on June 27th. Here the last couple of days, the SBA gave us another set of guidelines. Some of the provisions in it replace previously provided guidelines by the SBA. There's a number of important ones, and the last one I'm going to go over at the end, you might be the most interested in. So stay tuned for that. I'd love it if you'd subscribe to my YouTube channel. I'd love it also if you'd give me a thumbs up. I tell you what, you go a couple of minutes into this and you're not a subscriber, come on, do the right thing. Just having fun with you. All right, hey, so in this 34-page document from the SBA, and I'll put a link into it in the body of this, here are their major provisions. Some you may have thought you knew, but they've been confirmed in this. They've been put in writing. Some of the things that were in the instructions have been confirmed in the guidelines. So you'd think, well, if they're in the instructions, they're good. Yeah, I would say the same, but they've been further confirmed in this set of guidelines that came out last week, which you can find on the SBA website, sba.gov. So I'm going to give you the page numbers. The sub numbers and sub letters didn't seem to follow, in my opinion. I don't know if they got it out too quick or if they're indicating in this set of guidelines what it replaced in a prior set of guidelines. Nonetheless, I'm going to give you the page number of where to go in this recent set of guidelines and then just fit through on what subsection that it is actually in. So a couple of things to note is that you can apply anytime. And when I get to the end of this, I'll tell you some really good news related to that. But then the bank has 60 days to decide on the forgiveness amount based on the application, as well as the documentation is going to be required for that. And then the SBA is going to review it after that, because the SBA is then going to determine what they're going to send to the lender. So there is a process there. And I know that there's a number of banks that have indicated they don't even know necessarily the process. Well, guess what? This really laid out that process for the banks as well. So I would assume here pretty quick, we're going to see banks that are like, okay, yep, here's how you can go ahead and start the process to apply for forgiveness. Of course, we know we've got now the two applications. You can go to my website, jjthecpahelp.com. It's a community service website, no booby traps there. On page 8, it does adamantly confirm, unfortunately, that the EIDL grant, okay, so that's the free money, meaning you don't have to pay the SBA back on the EIDL grant that you got. That was the $1,000 per employee up to $10,000. But regardless of when you got it, this confirms that it will be a reduction of your loan forgiveness. So even if you had the full amount of the loan forgiven, you've met all the qualifications, you fill out the application and it indicates loan forgiveness equal to your loan. If you got an EIDL grant, the SBA is going to reduce it. So when you'll experience that is you're going to put the application into the lender, your application for forgiveness, and you're going to show, here's the amount of forgiveness. The lender is going to determine if they agree, if there's any adjustments, and then the lender is going to submit that to the SBA, as I indicated, but then it will be the SBA that will reduce that. So they'll be able to track it. Of course, on your loan forgiveness application, you do need to disclose the EIDL number. Whether you do or not, they'll be able to trace it. On page 8, the SBA guidelines, this is on that 34-page, again, link in the body. What it indicates is that if somebody doesn't apply, okay, they got 10 months. If they don't apply, then it's going to convert into a loan at that time. Now, I'm piecing together some things from the past, and we know that there's been updated guidelines upon updated guidelines. My understanding is that whatever amount is not forgiven, the interest is going to start accrue at the date that you got the money originally, the disbursement date. So it's not really a strategy to say, well, I'm not going to be able to get any of this forgiven for whatever reason, so I might as well just wait the 10 months past the end of my covered period because at least I'm deferring interest. Well, you're not. What you're deferring maybe is the payments, but that interest is going to be all the way back to the beginning based on what I know. That's not in these guidelines. That's just based on what we've seen since the beginning of this, going all the way back to the end of March. On page 9, specifically talking about applying for forgiveness, you have 10 months from the last day of your covered period, which another way to look at that is that if you elected the 8-week covered period, then it would be from the date of disbursement plus 8 weeks plus 10 months is your deadline. Now, if you're going to elect the covered period of 24 weeks, well, then it'd be your disbursement date plus 24 weeks plus 10 months for you to be able to apply. I don't know why you'd wait that long, but nonetheless, that is where it is indicated. And then what's interesting is that if you have, and this is discussed on page 9, it addresses the question that I've had from the beginning. There are some, unfortunately, that applied for the PPP and due to either misinformation, misunderstanding, or the bank wasn't aware, so many things are moving fast, the amount that you got for your PPP is actually too much. And how could that happen? Well, it was based on 1099s, not on your Schedule C line 31, or it was based on Schedule C 2018, or it was based on some other covered, or not covered period, but some other period of time that you and the bank came up with as a way to reflect an amount to get for PPP. And then we know starting April 14th forward, they started to make it more clear, okay, here's going to be the amount of forgiveness. Here's more exactly how you're going to be able to apply for that. Instead of giving you every circumstance of how you got more money, okay? What the big question is, well, what's going to happen? Because I got too much. So am I going to have to pay it back right away? Well, in these guidelines, what I'm indicating here, or what I'm seeing indicated here is that it's not going to be forgiven, and it will then go into the loan and you'll have to pay it back by the maturity date. So with that being said, it doesn't appear that at the time of loan forgiveness application, you're cutting a check for that amount, which I'm a little surprised by. That could change. Just know this, it's not a way that you'll be able to find other ways to be forgiven, and it will just be rolled into the loan unless and somehow the SBA thinks that the application for PPP funds was fraudulent. So I think you would want to, if you've got a large amount, in my opinion, that you got above and beyond what you should have, such as you included all the 1099 individuals or businesses that you paid to get PPP. Doesn't say it in these guidelines, but I think you would really want to consider avoiding the appearance of fraud, even though you can say, well, I just thought that was the case. Not always is negligence a defense. So all I'm saying is if I had a client, which I don't in these circumstances, but if I had a client and there was a large amount that was obtained from PPP above what they qualified for, I would be advising that client to submit a check at the time of application with an explanation ready to go. But according to the guidelines, basically what it indicates is that if you got an amount that you're ineligible for, well, of course, it's not going to be forgiven, which will all come out when you fill out the forgiveness application. On page 9 as well, it talks about the fact, and it's very specific, it talks about the fact that you can apply for forgiveness at any time. And it says you can apply before the maturity, okay, the maturity date, which is that 10 months. And it says you can apply before the end of the covered period. It says that specifically. You can apply before the end of the covered period. And the last thing I'm going to go over, I think, is the biggest news out of all this and relief. Now, on page 10, it, I think, makes it very clear that whether you're doing the 8-week or the 24-week, your expenses for payroll costs as well as the non-payroll costs that are eligible, rent, utilities, and the interest, that we still get the paid and incurred during the covered period. Okay, so covered period is 8 weeks. Those that got a loan before June 5th have that option. The 24-week is available for those that got it June 5th or after. But let me be clear, no matter when you got the PPP money, you can do the 24 weeks. It's If you got it June 5th or after, you can't do the 8 weeks. Now, with that being said, the big question is, okay, but if I apply before the end of my covered period, as in, okay, I'm not going to elect the 8 weeks, I'm going to go with the 24 weeks, so do I have to wait till the end of the 24 weeks? No, but then the most important answer to the second thing you're thinking of is, well, then how do I have to maintain employees if I apply for forgiveness before the end of the 24 weeks, if that's your elected period? We'll talk about that at the end. The one thing I'll clarify that makes it also clear, I think, in the guidelines and other guidelines is that when you're talking about the alternate payroll period, that doesn't have anything to do with the 24 weeks. That's talking about basically you're using the weekly or bi-weekly. So check out rules. I've got prior videos related to that. And the thing to note though is that the alternate payroll period has nothing to do with the 24 weeks. Okay. The alternate payroll period, you can take advantage whether you're doing the 8-week option or the 24-week option. You can use either one, and it's still paid and incurred in the covered period that you elect, whether 8 weeks or 24 weeks. So anything that you paid related to payroll in the covered period and anything that was incurred during your covered period, even if paid after the end of your covered period, you get to include. So lots of ways to achieve full forgiveness, assuming you applied properly and you're spending it the way that you indicated you would when you received the loan. So I'm going to talk about the end here about, well, then how do you handle your employees if you apply before the end of your covered period? On page 13 and 14, here's some important things to note. I'll probably do a special video on this, but on page 13 and 14, it talks about caps on owners. Here's the one thing to know. Really across the board, we're talking about a cap of $20,833 of what can be included for compensation for owner employees and the self-employed sole proprietor, independent contractor, gig worker, single member LLC that files a Schedule C. And for the first time that I'm seeing, they include Schedule F. I've been talking about Schedule F since before, basically anybody was, because I know Schedule F can be on your individual return subject to self-employment tax, which makes it included. I digress to say, now here's the differences. If you file a Schedule C, okay, you file a Schedule C, doesn't matter if you're a gig worker, independent contractor, sole proprietor, self-employed, single member LLC, you're filing a Schedule C. You're not filing a separate return, okay? For those that fall in that category, okay, it's line 31 divided by 12 times 2.5. That's the max. You're not getting retirement and you're not getting health insurance on top of that. Assuming you got the right amount of loan, you're at full forgiveness. You're done, okay? That's it. That's all you get. Now, check this out, okay? If you're a partner, okay, and you got the PPP based on being a partner and having self-employment earnings, okay, it's still the $20,833, but when you read on pages 13 and 14, it seems that, and you'll just need to go and check this out, you're taking that amount then times 92.35%. Why? Because it's accounting for self-employment employer portion, even though you don't have a quote unquote employer, but it's providing for half of the self-employment tax. So if you're a partner and you got it that way, which seems really rare that partners got that, check out pages 13 and 14, check with your professional. If you don't have a partnership, okay, just wash this 92.35% from any of your thinking. If you do not have a partnership, that you got money based on you being a partner. If you have a partnership and you paid employees, what I just said about the 92.35% has nothing to do with that. All right, hey, so for S Corp owners and C Corp owners, so the S Corp is a flow-through entity, the C Corp is not. How do you know which one you got? Well, look at the tax return that you're filing for your business, which would be separate from your individual return. If it says Form 1120, okay, you're a C Corp. If it says Form 1120S, you're an S Corp. You're going to look at the top left corner, and there's also a title across the top. So let's start with the C Corp. If you're the owner employee and you paid yourself wages in 2019, you get to include up to that 100,000 mark or whatever you paid yourself in 2019, the lower of, okay, divided by 12 times 2.5 of the wages. On top of that, C Corp owners, just go read it in page 13 and 14. If you have a question about it, I'm going to invite you to go to the link that I put in here and go to page 13 and 14 and just go ahead and read it for yourself, because it's very clear that for C Corp owners, they get their salary plus health care that was paid by the C Corp, plus the retirement benefits paid by the entity. Go read it. Now, for S Corp owners, hear me on this. Hear me on it. It makes it clear that everybody's ignoring this one sentence. Every single person that's written an article so far is ignoring this one sentence. Ridiculous. Okay, so for S Corp owners, it says, and you have to hear my follow-up. You have to hear the next sentence after this sentence, okay? For the S Corp owner, okay, it's your wages plus only the retirement benefits that the S Corp paid on your behalf. But here's the sentence. The reason it doesn't include health insurance like it does for a C Corp is because for S Corp rules that have been around forever and a day, the S Corp includes in the S Corp owner's wages the health insurance that was paid by the S Corp. So the wages that were paid to the S Corp owner are here. If the S Corp paid health insurance, that amount is added to the wages, and then this is the actual wages, okay? The higher amount, actual paid out money's wages, plus the health insurance for the S Corp owner paid by the S Corp. That's the wage amount. That's the wage amount. So health insurance, if done properly, according to laws that have been around for days, the health insurance is included. Stop running around thinking you're a victim because you're an S Corp owner saying, well, we don't get health insurance. It's not fair. The only way you didn't get the health insurance included is if you're doing it absolutely incorrectly for tax purposes, which is you didn't include in the past health insurance that the S Corp paid on your behalf in your wages, okay? So what does that mean? I mean, everybody's ignoring the second sentence. It says in the SBA guidelines that the reason the S Corp employee owner doesn't get the health insurance on top of the wages is because wages is to include the health insurance. Makes total sense to me that the S Corp owner is, yes, getting the health insurance because they're getting wages. The difference is from the C Corp is that the wages are capped at $20,833. So if you have an owner employee and they're paying themselves over $100,000, and on top of that, the health insurance is included in the wages of the S Corp owner, then yeah, there's a haircut there. I'll give you that, okay? But if you have an owner employee and they're paying themselves 60 grand and they have $12,000 in health insurance, taxable fringe benefits that are included in their wages, they, as the S Corp owner employee, get to include $72,000 as part of their payroll costs, plus the retirement. Okay, let's see. So that's on pages 13 and 14. So go check that out. Pages 15 and 16, buzz through that. There's a number of kind of clarifications. Then on page 18, and now we're wrapping this up, on page 18 and 19, okay, it talks about the 25% reduction in salary, and that's per employee. It talks about the exceptions. These are all what we've knew before. Okay, as it relates to the salary reduction, the Flexibility Act introduced two new safe harbors, but they were related to FTEs. So there's two ways you can get a haircut to your PPP forgiveness. It is reducing an employee's salary by more than 25% of their compensation, more than 25%. That's per employee. Okay, and then the amount of your loan forgiveness would be the amount of reduction, okay, beyond the 25%. So if they go through an example, really good example. So if you had somebody and they reduce down the salary by 30%, then the loan forgiveness, okay, would be reduced by that employee's reduction of the 5%. What does that mean? No, you're not reducing down your loan forgiveness by 5%. If you have, and it goes through the example, you have a couple of scenarios. So if you're wanting some clarification, go to page 18 and 19. They lay out some really great examples. They're very easy to understand. So go check them out. Again, the link to that is in the body of this. Now, there are exemptions or exceptions. You know, if you had to let somebody go for cause, if you couldn't replace them, or they left, or you offered employment and they wouldn't come back, we have those exceptions. Those are the same for the FTEs. And then out of the Flexibility Act, the two new safe harbors that were added as well is that your business has reduced to the fact that you aren't able to even hire the same amount of employees that you had back, because you've had 5 locations, now you have 2. You had 1,000 clients, now you have 10. Right? If your business didn't get back to, then that is an exemption that or safe harbor that has come out of the Flexibility Act. Okay, so as I have been talking about from the beginning, so what do you have to do when maintaining your employees as it relates to the salary reduction? Because we know that basically for FTE, got enough safe harbors that it's going to be rare unless you just really went against everything PPP was to do. But a lot of exceptions, a lot of safe harbor to avoid the haircut for the FTE. But what about the salary reduction? Because the Flexibility Act didn't bring any new safe harbors related to the reduction in salaries, that 25%. So the question has been, okay, well, if I apply for forgiveness before 24 weeks, do I still have to maintain the FTEs through the end of 24 weeks? Do I still have to look at 12/31/2020? Or if I apply for forgiveness before the end of the 24 weeks or the 8 weeks, whatever, before the end of your covered period, do I then have to maintain salaries at the amount that I was to avoid the haircut? Okay. And the question is even, well, do I have to wait until after the 24 weeks? Or is it better to wait the 24 weeks to see that I maintained all the employees, that I maintained all the wages through? And why is that a big question? Well, there's a big difference between 8 weeks and 24 weeks, right? I mean, that's an obvious 16 weeks. So you could have a business that it's like, well, I mean, I got the PPP, I used it for its purposes. I can't actually now keep paying these employees the same amount. I can't keep the head count post PPP, right? I can't do it. So I want you to remember one thing, okay? I want you to remember one key thing. You ready for this? When you're determining that reduction, okay, what are you comparing it to, right? It's not you're comparing it to the beginning of the covered period. It's not comparing it to prior year. There's one period of time that everybody seems to miss or just not paying attention to. The period of time that you are comparing whether or not you reduce down employee salaries by more than 25% is February 15th, okay, to April 27th, okay? So it is the February 15th plus 30 days of when the enactment was put into play. So it was put into play March 27th. So February 15th to April 27th, okay? That period of time, what were you paying your employees? What were you paying those specific employees? That's what you're comparing to now in your covered period, okay? Did you pay less to those employees? Okay? Now, you ready? Check this out. When you apply for forgiveness, apply for it the date that you apply for it. Your requirements end on FTEs and reviewing salary reductions. The requirement ends. So you kind of get to pick. You elect the 24-week covered period, which is you indicate that on page 1. You show data disbursement plus 24 weeks. That means you've elected the 24-week covered period. Then you hand it in when you've met full forgiveness. And yes, it can be before the 24 weeks. So the date that you apply for forgiveness, that's when your requirements end. So I would say this, you want to find a balance, and then we'll wrap up. You want to find a balance here, okay? It might be like, okay, I'm to the penny, boom, let's go get the forgiveness. Now, if you're self-employed, yeah, you're applying for forgiveness ASAP. Everything I've been talking about related to FTEs and salary reduction, of course, doesn't apply to the self-employed. Self-employed, you're filling out your loan forgiveness app just as fast as the bank will accept it because of everything that we've been talking about earlier in other videos, which is if the amount that you applied for without line 31 is the same line 31 that you're using when you apply for forgiveness, you're done. So on the employers, okay, you elect the 24-week period, you're 10, 12 weeks into it, you apply for forgiveness, that's where your cutoff is for having to track FTEs and salary reductions. Now, two key things to know here, okay? If you had a haircut on either one, but if you had a haircut and you handed in an application for 12 weeks, okay, and you had a haircut calculation, you have to extrapolate the haircut that you already were experiencing to the full 24 weeks. What does that mean? You get a haircut of $50 a week for a certain employee, okay? So $50 times 24, okay, that's a $1,200 haircut to your loan forgiveness. Meaning it's not, oh, well, it's $50 a week, I was 12 weeks in, boom, I only have to take a haircut of $600, okay? If you're getting a haircut, you have to include a 24-week haircut based on the haircut that you already had experienced. You're not determining a future haircut. Now, let's be really clear on this, okay? If you've paid everybody and you're good to go and you didn't reduce any salaries and you didn't reduce any FTEs and you hand in the application, it's done and over with in determining what happens on the go forward, okay? If FTEs and the salary reduction comes into play, okay, your time period ended of tracking that. So let me say it the opposite. You're handing in a loan forgiveness app and you got a haircut. You got a haircut. You did reduce down somebody. You do have a $50 a week reduction to your loan forgiveness, okay? And you're handing it in at the 12-week mark. You have to include the haircut for the entire 24 weeks because you already are having a haircut, okay? So yes, that is including a future amount, but it's not the unknown future amount. It's a known reduction that you then have to account for 24 weeks. So now, could you reverse that by going through the 24 weeks? Yeah, so my point is that for those that don't have haircuts, apply, but the balance here is this, okay? Because I know it's like, oh, I want to get it over with. I just stop stressing. I mean, if you got rent and you got plenty of employee, there's just stop stressing. But what I'm recommending to my clients is this: let's still have more than enough. We don't have to wait the 24 weeks, but let's still have more than enough. Why? The SBA is not going to change rules. But what if there's a question? What if you just miscalculated something? What if you're like, oh, shoot, because it went to the bank and then the SBA and then the SBA comes back. Once you put in your app, you're done collecting up your expenses. You're done. So why not just make sure, if 3 months of rent gets you there, okay, why not have 4? You got paid and incurred. If 8 weeks of payroll gets you right there, why not just go an extra payroll? Why not just have 10 weeks of payroll, 12 weeks of payroll? If you don't have any haircuts, why not just have enough? Have more than enough. And why? Because now you've given yourself a safety net. Okay. Again, the rules aren't going to change related to this. The only time rules have changed, well, I take that back. In the last month, the rules that have changed have always been for the better. So I don't see going forward we're going to see any rules that would go against us. However, if you read the articles, there are some that are saying, hey, maybe go ahead and get your loan in case they change a rule or a law that's not in your favor. I don't really see that. So here's the deal. For me, okay? I have PPP. I'm at my 8 weeks, okay? I'm gonna go 12 weeks. I'm gonna have plenty of rent. I'm gonna have plenty of utilities. I'm gonna have plenty of payroll. My payroll's been the same. My FTE's been the same. I don't see that I'll have any differences there. But at about 12 weeks, I've got plenty O. So if for some reason, okay, you've chosen the wrong payroll period or the wrong alternative date or whatever the case is, boy, if you've got 12 weeks in there, you got plenty of safety net, because really, if you've spent the money and you've done it properly, you should get full forgiveness. You really should. So why rush it and then go, dang it, I missed it by this, or I didn't include this, or dang it, that didn't count, right? Why be in those circumstances? Why not just come with more than you need? It's like going to grandma's house or grandpa's house, or your favorite aunt or your favorite uncle or cousin or whatever, right? And when you go, typically there's more than enough food, right? You got 10 people, they got 25 rolls sitting there for you. Okay, you got 10 people, they got 3 pies waiting for you, right? So why not come with more than enough when you're going to your forgiveness? All right, hey, thanks for tuning in. I'd love it if you'd subscribe, and then don't you ever forget, you've never met a CPA quite like me. All right, hey, have a great day. Again, hey, I'd love it if you'd subscribe. Appreciate you.
JJ, the CPA, has been serving thousands of businesses for the last 27 years. He is also a national speaker teaching CPAs across the U.S. about the latest tax laws, as well as an author and now what many call a YouTuber. Through this COVID era, JJ became a voice of calm during the pandemic, guiding countless businesses, self-employed individuals, and fellow tax pros through the PPP maze. Now, JJ is taking his know-how to help businesses that have asked for his help to rebound out of this mess that no one saw coming. He is doing this out of his own pocket, not for a fee, and to simply show the American business owner that they are not alone. JJ, America's CPA, is here to help save the entrepreneurial spirit, one business at a time.
Been doing this for years. We bout to get your money right, you got nothing to fear. From the burbs to the ghetto, put the pedal to the metal. I got my mind.
Hi, this is JJ the CPA, and
Yeah. JJ the CPA is here. Yeah. JJ the CPA is here. Let's go. Yeah. JJ, the CPA is here.